Hello. We're glad you've joined us to learn a bit more about Avalanche, also known as AVAX. This coin is part of the smart contract sector, similar to Ethereum, the leader of the smart contracts coins. Before we get into the fundamental analysis of Avalanche, we want to urge you to watch the whole video, as we will reveal both what that $1,000 could look like if AVAX took over the top spot from Ethereum as a sector leader, and what the value of the $1,000 would be if AVAX had the same market cap as Bitcoin. Before we get into the fundamental analysis of Avalanche, we want to urge you to watch the whole video, as we'll reveal both what $1,000 could look like if Avalanche took over the top spot from Ethereum as a sector leader, and what the value of the $1,000 would be if Avalanche had the same market cap as Bitcoin. So stay tuned. It may make you wonder why you're holding on to cash right now. Welcome to Interweb Coins, where we cover crypto, the economy, and the people that influence it. We're here to lift the clouds, pull back the curtain, and give you a leg up in the world of crypto. Today we're going to do a fundamental analysis of Avalanche. This will cover the project's founders, what big players are invested in it, the sector, what it's trying to solve, and of course, a price prediction. One of the most important things we must analyze when looking at any crypto is if its supply is increasing, decreasing, or fixed. Avalanche is inflationary in nature, meaning similar to the US dollar, the coins in circulation are currently on the rise. This doesn't necessarily mean that it will continue to lose its value like the dollar, but it makes understanding the tokenomics and watching this whole video that much more important. According to CoinMarketCap's most recent numbers, Avalanche has a circulating supply of 297 million and a total max supply of 411,839,473. This means that of the total supply that will be created, 72% is already in circulation. At the time of this video's creation, the price of Avalanche is $16.01. It's currently ranked number 17 among all cryptos, and ranked number 7 in the smart contract space. Currently, the price of Avalanche is negative 89%, down from its all-time highs. Nothing we haven't seen before in crypto, as the bears currently have control of the market. Now, before we get carried away with valuation, let's get started on a bit of fundamental analysis on Avalanche. Avalanche was launched by Avalanche, founded by Cornell University professor Eamon Gun-Sirer and Cornell University computer science PhDs Kevin Seknicki and Maofan Ted Yin. Gun-Sirer is a veteran in cryptographic research, having designed a conceptual peer-to-peer virtual currency 6 years before the release of the Bitcoin white paper. He was also involved in work on Bitcoin scaling solutions and research on Ethereum before the infamous DAO hack in 2016. From that research arose the white paper that led to the foundation of Avalanche in 2018. The project closed a seed round in February 2019 that included investors such as Polychain, Andreessen Horowitz, and Balaji Srinivasan. Avalanche closed its initial coin offering in 2020 in under 24 hours, raising $42 million in the process. Avalanche was built to solve multiple issues found in most blockchain networks today. The platform combats centralization by providing a viable alternative to networks like Ethereum. It also builds upon some of the shortcomings of that network, with more programmability, features, and functionalities. In terms of issues with congestion, Avalanche is designed to be scalable. The network has demonstrated sub-second transition times, putting it on par with the top payment processors in the world, such as Visa and PayPal. Specifically, the blockchain can process 6,500 transactions per second. These transactions feature sub-second finality as well. In terms of operating costs, the gas fees on Avalanche are much more affordable than Ethereum. There are fees for creating and minting assets. You also pay fees on transactions, staking, and the creation of blockchains. These fees are then burned. In September 2021, fresh on the heels of a $180 million incentive program, the Avalanche Foundation announced a $230 million raise to jumpstart liquidity in the network's burgeoning decentralized finance, or DeFi, ecosystem. The Avalanche Foundation said in a statement it will use the funds to support and accelerate the rapid growth of DeFi, enterprise applications, and other use cases on the Avalanche public blockchain. Traders have plopped $2.6 billion into Avalanche, according to data from DeFi Llama, making it the 6th largest network by total value locked, or TVL. The funding round was led by Three Arrows Capital and Polychain Capital, with participation from CMS Holdings and Dragonfly Capital, among others. Now for the part you've been waiting for. This is the part most investors in crypto blindly focus on. Hopefully, this evaluation will spark your curiosity in Avalanche, but will also give you a realistic outlook on a potential investment. This evaluation is based on the current supply of Avalanche and the all-time high market caps of coins we're comparing it to. Keep in mind this will not happen tomorrow, or possibly ever. However, keep watching and we'll share why we think it's not out of the question. Alright, so here we go. So what would $1,000 turn into if Avalanche grew to the market cap of Bitcoin at its all-time high of $69,000? If you invested $1,000 into Avalanche at $16.01, that $1,000 would turn into $251,368. That's a 25,137% gain. So what would $1,000 turn into if Avalanche was to overtake Ethereum for the #1 spot in the smart contract space? If you invested $1,000 into Avalanche at $16.01, that $1,000 would turn into $114,668. Now that we've drawn this picture for you, it's up to you to be realistic. Do they have the team, the use case, the developers? How about the funding? That is up to you to decide and do your own research on. Let's just take a look at the crypto and economy as a whole at the moment. In 2022, the crypto market's market cap has been settling between $500 billion and $2 trillion for the last 3 years. Now, how would it be impacted if money from other markets joined the party? Money that is currently being shut out of the market due to lack of regulation. According to Seville's World Research, here's a quick estimate of global wealth. Global real estate totals $325 trillion. The world's supply of above-ground gold is estimated at $12.1 trillion. Equities contribute to another $109 trillion. Now look again at the total size of crypto. Look at the adoption curve. Look at how much money is in the stock market, gold, real estate, not to even mention the derivatives markets. If things are properly regulated and institutional money joins the market, are our previous evaluations realistic? Again, that's for you to decide. If you're in or plan to be involved in crypto, you must plan for volatility. And remember, time in the market always trumps timing the market. If you like to be liquid, however, and time macro trends, check out our other videos where we cover crypto adoption, macro-level cycle charts, and fellow investors' opinions. If you would like to perform our $1,000 calculation yourself on any other coin you're interested in or at a different price point, we have left a link in the description for you to do so. We hope you've enjoyed this video and choose to let us continue to help you do research on the crypto industry. A like or follow will help us reach more people and let us know